Good evening, everyone. My name is Yogesh. Thank you so much. I see most of the faces, not the faces, but most of the names very familiar. I see some of you attended the session yesterday also. So, welcome back. Uh, we are going to do this exactly in the same way we did yesterday, but as I said, the connection issues can happen. Maybe you can hear me now, but maybe over a period of time there might be some disturbance. It is the congestion which we are facing all around the world. Everybody is using Webinar, Jam, Zoom. Most of the softwares are being used at this point of time. So we are trying to give you the best of the best. Once again, good evening and welcome. Please send me a chat, like on my chat, if you can send me a thumbs up or a yes to a question. uh, have you received your demo accounts by your RMs? Anyone who has not received a demo account, anyone who has not received a demo account, if you have not, call your RMs and you can get your demo accounts really fast. And this session today, we'll see how to do the trades. We'll understand what CFDs are. Anyone, please, who have not uh, received your demo accounts, you can call your RMs, anyone you're associated with, and they will forward you the demos right away on the call. Just talk to them. Yeah, if you have anybody who has an old demo, would do. Anybody who will need, if you have an old demo account which you had before, you can use the same one. Please just talk to your RMs and they will provide you. There is one dedicated person to all of you who have helped you out in registrations or something. You can call them and they can give you the demo accounts as well. If the demo account is not received, don't worry. We are anyways going to do this trading a couple of times. So we are going to use the platform. You can see right now how it is used, and you can quickly try to use the same later on in the demo account. Also, it's a very user-friendly platform. Once again, before we start, allow me and my team of Century Financial, once again, a big vote of thanks to anyone who's in the healthcare industry, in the medical industry. If you have your friends, colleagues, sons, daughters, wives, any husbands, anyone who is working out there risking their lives for us, a big vote of thanks on behalf of Century Financial and myself. We will continue to do this session today. Just a small recap yesterday, what we did. Um, there were we discussed about the product library. We tried to discuss about commodities, currencies, indices, shares, share baskets. So we went through how commodities have shown trend in gold, how they are priced, what is the price code, how much they move, what is the historical price movement. Today we are going to understand the risk behind this. And to understand the risk, first product which we have to understand is what we call contract for difference, also known as CFDs. CFDs are something which is mostly it is done in it started in Europe and UK, and CFDs have gained a lot of popularity. So when you will see that how CFDs are traded, you will realize that what is the reason that why CFDs have been so popular around Europe and US, and it's like one of the most popular form of derivative trading. And the asset classes which you saw yesterday, indices, shares, share baskets, currencies, commodities, there are CFDs created for all of them. Okay, so when you are actually buying and selling shares, indices, commodities, so if you're buying gold as a metal, you are not getting a physical metal at your home. You're not buying a physical metal of gold or physical barrel of oil. You're buying a contract for difference. You are buying a CFD. It's very important to understand CFD as a product, because CFD is more like a replica of the actual product. If you want to buy oil in a physical barrel, you will have to go either to the exchange to buy a physical barrel of oil, or you go to a place where you can buy. But when you are trading online in derivatives, when you're trading online on these platforms, you are only trading in CFDs, which is also known as contract for difference. Why it is called contract for difference, that when we will proceed, we will understand that why this is called a contract for difference. One of the most important features of CFDs and why most of the online brokers they allow CFD trading is you can use something called margin and leverage in these platforms. So when we talk about margin and leverage, we are talking about a very basic principle of employing debt to increase the productivity of your capital. What does it mean in a very simple word? If you want to buy a house, let's say the house cost $1 million. Now you have $1 million in your bank account. You are very well to do. You have $1 million in your bank account. You see a nice house, a nice villa. You want to buy it. It's $1 million. How many of you would take that cash out from your bank and buy that house with the complete cash, $1 million? And how many of you would prefer to give a down payment and rest get it on mortgage, even you know that you are employing a debt? So if you're there and if you understood my question, just write somebody who writes debt, I will understand that you will employ debt. Somebody who writes cash, I will understand that you will want to invest full cash and buy the house. Just write it on the chat and I will explain you what or what not normally the people would do. Okay, somebody said down payment, debt. Anybody else? Let's try to make this interactive, guys. Debt, debt, debt. Okay, so we agree with the point that even if you have that much amount of, okay, everybody has said debt. One person just said cash, and I think again it's your complete choice. You can give the cash, you can give the debt. Majority of you have said debt. So what happens is when you buy it on cash, it's not a problem. But what happens is the productivity of cash, if you have kept your cash blocked somewhere and if it is not growing, then the purpose of investment is defied. Because I saw Narcos, and I'm sure most of you must have seen at least at some point of time. It was just entertaining for one fact that everybody was talking in Spanish, and you couldn't understand a word, but it was just very good for years. In Narcos, there was a smuggler called Pablo Escobar, and they show that how during his times when he needed cash, long before he buried the money in the under the ground, and then when he wanted that cash, he goes back to the same ground and start digging up, only to find the cash which was completely rotten. So even if you bury your cash inside the land, it will not come across uh, healthy and full. It will come across rotten. So when you block your money anywhere, and if it doesn't grow in value, then you are just losing the cash. Because 100, take example, very simple. 100 dirhams 8 years ago and 100 dirhams now, obviously the value is much lower, right? So you need to have the purpose of the investment should be it should be growing. Now, when it comes to the house bit, if you are buying $1 million house for an investment, also you know that you want to sell it later on to encash the profits or losses. If you buy a house today, let's consider this that there is a possibility that if you want to sell it 2 days after, you may or may not be able to sell it. I feel that the probability that you may not be able to sell it will be higher because to buy a house, you will need a buyer who should be ready to buy it at a certain price. And things like this take time. So we can put real estate as one of the illiquid assets. When I say illiquid, it has nothing to do with good investment or bad investment. It is just illiquid. You cannot quickly sell it to cash, right? If you have $1 million investment blocked in it, you will need a buyer who buys it for $1 million. And if you're not able to buy it, then your money is just blocked, right? So many people, what they do, instead of blocking the full value of cash which they have, they pay a down payment, rest they get a mortgage from the bank, and they keep paying installments. What happens? The rest of the money which you have in your account, you can use it to invest somewhere else. So that way you are employing debt to increase the productivity of your capital. How the productivity increases? That if you have $1 million but you put only 100,000 from your 1 million, right? And the value of the house is $1 million. Tomorrow, if the house becomes 2 million, you're making $1 million profit on the 100,000 which you blocked. So that definitely increases the productivity of your capital. If you had invested your 1 million cash, you would have made 100%. But you just blocked 100,000, so you're making kind of 1,000% on your investment, because that is the money which was blocked. Your another cash is invested to somewhere else. So you can diversify by employing debt in your capital. That being said, again, what I said on the yesterday, that you should not borrow cash to do trading. That's a different thing. What I am telling you, by employing debt, try to enhance the productivity of your capital. That is a different thing. Okay. Do not mix these things. Now, once you have understood this concept, leverage is exactly like this. So CFDs, what I told you, CFDs of gold, CFDs of Apple, all the products which I showed you today are CFDs. Now, these are leverage products, which means that you only need to deposit a small percentage of the full value of the trade in order to open a position. There are two words here, open and position. Position is the trade which you take in your trading account. Opening means if you are starting your trade by buying, right? It is opening. When you want to book a profit or a loss and sell it, that is called closing your position. Okay, this is the terminology, so just remember it. Those who have demo accounts, you can log into your demo accounts, and while I'm preparing watch list and doing trades, you can see this, you can understand this first and then try to do it. Also, uh, how many of you have done your assignment which was given to you yesterday? Because I see most of the familiar names. 10 companies which you are familiar with, which are traded globally and which you're using in your daily lives. While I am doing other stuff, you can send the name of those companies on your chat, and I will also look into it, and I will create a watch list of combined all the companies to show you that how similar and different you are. Somebody asked me what is the meaning of position. So once again, position means when you open a trade, it is called position. Opening means when you, let's say you're buying gold. So when you're buying gold, which means you're opening a gold position, just write 10 stocks, all 10 stocks together, okay, and then send me. Please do not send one by one. Just send me all the 10 stocks. Remember yesterday's assignment. Write all the 10 stocks together and send it to me, and then I will create a combined watch list, right? So position means the trade which you take. Now the concept of margin is very simple. You can see on the slide there is this big circle, right? Consider the total value of your trade. So let's take $1 million, for example. $1 million, this is whole circle. But to buy the $1 million trade, you're just blocking this gray area, which is called position margin. Which means today, if you want to buy $1 million worth trade, or you want to buy $1 million worth gold, you don't have to have $1 million. You don't have to block $1 million. You just have to block a small portion, but your exposure, your total value of your position will be $1 million, right? Just like buying a house. I will give you a live example. Okay, many of you send me Lenovo, Johnson Johnson, Samsung, Microsoft. Okay, 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 okay. So I'm still receiving, and I will find it the most common ones which are there, and I will create a watch list out of you so you can see that how many of you have sent different. Keep sending me, keep sending me. It will be good. 10 global stocks which you also use in your daily lives as well, right? So this is called margin and leverage. Now, what I'm going to do is I will take you through the live platform, and keep sending me these stocks so I can create a watch list, and I can show you how it's done. Okay. Now, all of you could see my screen at this point of time. I have logged on to the live platform right now. Now, over here, when you open your trading account, you need a platform to execute the trades, buy, sell, look at the prices. So this is a similar platform where you can buy, sell, trade, whatever you want to do. This is a demo account. So I have put a demo equity of $100,000 in this. Okay. Whatever money you put, you can add into it, and it will appear on your cash. Which one is cash? Those who have your demo accounts, you can open it. Those who do not have demo accounts or are still yet to receive, don't worry about it. Just see it. If we won't click a picture, or we are anyways recording this video, we'll try to combine everything and send it. Okay, it is small, possible to expand. Not sure how do I expand it, but okay, let me try to zoom in my platform if that can be possible. Just give me a second, please. Okay, I have tried to zoom in. Uh, can you see the numbers now? Is it possible to see the numbers? I've actually increased the size of the web browser. I think it should be easy now to understand. So there are different options. Okay, let me know if you have any problem. Just type it on the comment, and I will be able to see. Now, when you open your trading account, you can put whatever cash you want to. That cash will be used only for your investment purpose. It's not like a bank account. Like your bank account can be needed for several things. Your bank account can be done with your bank account can be used to uh, do payments of deva, to utility cards, everything. But over here, this is your trading account. It is only used for investments. Okay. Now, once you open your trading account, you put a cash. When you put your cash value reflects over here. Okay, please keep checking on the extreme right, cash, which says 100,000 just after the account value. So there is account value, and then there is cash. Cash is what shows you how much money you have invested so far. Account value shows you the actual value of your current portfolio. So let's take an example. If you bought gold, oil, stocks, a couple of things, right? And the value of your all those shares, which was worth $100,000, has dropped by 5,000. So your account value will show as 95,000. Okay. Similarly, if you have profit, then it will show you as, let's say you have a profit of $10,000. So it will show you a profit of $10,000. So this is how it goes. Account value shows you the real value of your investment, and it keeps fluctuating. As long as your trades will be open, it will continue to fluctuate. Okay, so this is something which you have always have to remember. Whenever you log in, look at your account value first. So had you invested 100,000 and if it is 98,000 now, which means you're in a loss of 2,000. If you had invested 100,000 and then it has gone up to 110, which means you're in a profit of 10,000. So that way you see your account value. Now, for every person, there has to be a layout which needs to be created. Layout means it should not be very complicated also, and it is up to you how much you want to get involved in this thing. So when you look at your layout, there is an option here, split and then add. Split means when you click here on split, you will see different layouts here. Three windows here, three windows like this, four windows again three windows here, three windows. So it's up to you how you want to do it. Let's say you select the second last layout. So now you can see few more columns and few more windows popped up, three more. You want, you can split them also, but it will become over complicated, right? So you don't have to do that. You can use a different layout by clicking on a different screen, so you can have multiple screens for yourself, and in one screen you can have multiple windows also. You will practice it, you will easily get to know how it is done. Now I see. Okay, somebody just asked me about the transaction charges. So transaction charges is something which will be sent to you over the email. Just talk to your relationship managers and they will send it to you. But definitely there is a schedule of charges which is prepared and that can be sent to you on the email. So right now, let's just try to understand that how these trades are done. And today itself in the evening, if you call your relationship manager, they can send you all the necessary emails you want. Now, I'm looking at a different layout and I want to first understand these functions and then put my layout. So how do you understand these functions? Look at the very first option, which is called search. Okay. Now search, when you click on it, you can search whatever instrument you want to. So yesterday we talked about gold, right? So I search gold, I see gold cash commodity. I click on gold, I will see a gold chart. appearing here, right? And I will see the current buying and the selling price of gold, and then I will see the percentage increase, 0.5% increase today. If you remember yesterday, I was talking about the gold prices, right? All of you gave me a Dubai gold prices 211 dirhams, right? 200 dirhams, 185 dirhams. I told you this is in dollar for 1 ounce, $1,754 for 1 ounce. Now, what we are going to do is, if you see, since yesterday till today, gold has gone up and it has come down also. So we have to understand the movement of gold and how it moves. So what you can do is, you can click on search option, right? Anything which you want to search, click here, search. You write gold, you can search it. You write Adidas, click, you can search it, right? So you can find the buy and sell prices. You can see the percentage increase in Adidas today is 5.7%. It has actually gone up. You can see in the chart from 189 it has gone to 210, which is a very good movement, right? So this way, whatever you want to search, you can. But yesterday I also showed you something called product library, right? And when you go to the product library, it shows you all these asset classes. So what you need, first, you can click on adding here and you can add your product library. So this becomes your library. You can always do a select sector wise search also, and you can always increase the size of this depending upon which column you want. Anytime you want to maximize this, click here and you can maximize your product library. Okay, I've zoomed in, so there will be, I will have to move windows a bit more, but I hope everybody can see this very clearly. Now this is your product library. So first option, the book which you saw next to that search option, is your product library. You search whatever product you want from the library, or you use the search option, it's the same thing. Then move the most important part, the watch list. This is your watch list. You need to create a watch list for yourself, the products which you will be using, which you will be looking at, which will be looking at daily basis. Now I gave you one assignment that you have to put 10 stocks, you have to write 10 shares for yourself which you can use in your daily lives. Even if you watch, so I watch movies on Netflix and Amazon Prime, so that's Amazon and Netflix for me. I use an iPhone, so that is an Apple for me. Then I use Skechers, so there's a Skechers stock. I will put Skechers. I use also a Lenovo laptop. I also use a Dell laptop, so I will put Dell. I use Microsoft Office all the time, so I'll add Microsoft. I use Unilever products. I use Johnson and Johnson products. So sixth and seventh and eighth is Unilever and Johnson and Johnson. Then I like Avengers. I like watching Walt Disney movies also, so I'll add Disney as well. And then at the same time, apart from media, entertainment, FMCG, left with one more thing. I drink Coca-Cola, so I add Coca-Cola too. Like this, you can add different companies for yourself, right? Again, the viability of that, whether to buy or sell, it's a different scenario. Right now, I'm just trying to make you form a habit where you can constantly keep a check on their prices and understand how much they move. That's the whole idea. Not recommending you to buy these right away. I'm just telling you that you can make a list of all these products which you're interested in. Now, what I'll do is I'll create a watch list for you. Okay, how you create a watch list for yourself? Those who are live on the platform can do it with me. Those who are not, just have a look and try it again in the evening. Click on this, sorry, click on these three dots, click on create a new watch list. When you click on create new watch list, you will see a window opening. Okay, click on the menu and you can give it a name. Let's say Investor Education Week Day 2, and press enter and the name appears, right? So this is the watch list which I'm creating right now. You can maximize it. So what you can do is close this, and now you know another layout, another window. Add watch list, Investor Education Weekday 2. Select this watch list. Now it's open. Now it's a part of your layout. Now you need to add. So you can always maximize this and now you can add. So when you maximize one tab, the other starts appearing on the next. So you can easily switch from product library to investor education week. You can see your watch list and the library just with the switch of the tabs. Now I'm going to add the product. Now when I add the product, I will combine the responses which you have sent. So now I'm going to read it out what all of you have sent me. Comcast, Royal Dutch Shell, Oracle, HSBC, Citibank, Netflix, Amazon, Google, again, Apple, Netflix, Instagram. Somebody has sent me Instagram. So Instagram is the part of Facebook. So we'll take Facebook as a stock. J&J, Microsoft, so Johnson& and Johnson, Microsoft, Intel, uh, App, okay, Apple, Microsoft, again repeated. Colgate and etc. will be a part of, I think, Unilever, and Dell, OnePlus. I think it's an Indian company, so Indian stocks we're not doing, but then we'll add more. Netflix, YouTube is a part of Alphabet, which is Google, so I will add that. Uh, Again, Johnson and Johnson, Microsoft, iPhone is Apple. Samsung, Korean markets we don't have, but then I'll show you how to invest into Korean markets without, even if you don't have the stock, you can invest into an ETF. So we'll find that out. It's a very good observation. And again, Netflix, Amazon, Facebook. So what I understand is everybody uses Apple, Microsoft, Amazon, Facebook, Google, and Netflix. This is something which is basic. Okay, so now among the crowd of 21 people right away, I can see most of you have sent me the stocks which are Apple, Facebook, Google, Microsoft, right? These are the companies which most of you are using in your daily life. So one thing, what does it tell you about the company? Okay, somebody said, I do not see you adding. I'll just add it right away. I'm just adding it right now. I am just listing out the names, so I will add it, the ones which I have in my mind and the ones which you have sent it to me. So let's do it. Okay, this is your watch list, right? Next to it, there's an add option. So I click on plus. So not here. Sorry, this is add a product, this small glass. Here I click add a product and let's search. Let's search Facebook. I write FB, added. Search Microsoft, the ticker MSFT, added. Apple. Search Apple, you find Apple shares. Then HSBC, if I see if it is active in a demo account. Okay, you have US shares also. So I'm adding HSBC US. Also adding Comcast. And I will add Royal Dutch Shell. Somebody also pointed out Royal Dutch Shell US. I'll see if the UK is also available. It's not. So I'll remove this one. Remove from the watch list. Okay, add more shares. Walt Disney. Then Netflix, Amazon, right? These are all US stocks so far. US market will open 5:30 p.m. I told you in the next 1 hour, and we'll do some trades during that time also. Then coming on, the indices which are behind these stocks: US 30, S&P 500, then Nasdaq, or US Nasdaq 100. I will also add commodities like gold since we have done a lot of transactions. I will also add crude oil. So let's say crude oil Brent. And I will add euro as a currency as well. Okay. Now I'm just adding these products to my watch list. Somebody asked me, in my account I have added the 10, but then it shows in live account only. So guys, if you see in your US stocks will be available in your account. If you have an old demo account, then maybe the US stocks are deactivated again. You can just call your RM and get another account or another demo account. Only US stocks are available in your demo accounts. UK and Europe, and there are European stocks as well, like Adidas, BMW. So let me add those also. What is the purpose of the watch list? So the purpose of the watch list is to, first and foremost, if you are a person who trades daily in some instruments, you don't have to search every time. Like every time you log in, and if you have to search the instrument, doesn't make sense. So you can create a favorite list of yours for yourself. This list will continue. Every time you log in, just go to your watch list and you can see. So what you can see in the watch list, as you can see on the screen, you can see the lowest, highest, the opening price, the closing price, and the percentage increase and the increase in points. Okay, your screen, okay, somebody's screens does not show lows and highs, so you can set your watch list. Okay, let me show you a few more settings on this and you'll be able to understand. So what you need in your watch list is you can add it. So click here and there is an option called edit table. I hope everybody is seeing this. When you click on edit table, you will get the options which you need in your watch list. So you can tick low, high, open, close, the percentage change, and obviously buying and selling prices that's involved in the product you can involve. So this way, when you tick all of these marks, you'll be able to see all these options. Just try it in your watch list and see if the results are any different. Right? So you can go high and you'll be able to see this. Now, once I've created my watch list, and those who are not able to add stocks, just add the commodities and currencies which are available, like gold, S&P 500, Nasdaq, oil, Euro USD. Also, I will add some European stocks which we can trade live in the market. So I'm just adding, say, BMW, then Volkswagen, okay, and then say Bayer. All these are European companies. Added. Right? So you see the first half US stocks still not working because market is not open. The other half, these are the commodities, currencies, instruments, all these are working. Now, once you have created your watch list, now you need to understand what you have to do when you're at home. There is an iPhone app also which is available for the same, but I am a laptop person, so I always do these things on a laptop. It's much easier. You can always log in. So make a note of this. Somebody asked me, can you define the percentage change? Is the delta as per the change yesterday, or we choose the start date for the delta change? So there is, every commodity has a opening and the closing price. Okay. So the price at which it opens compared to the previous closing, that is the percentage change for that particular day. So you will see the previous closing price and then you will see the price at which it has opened. So that is the difference, which is your percentage change. Right now, what you need to do is, when you're at home, please make a note of this. What are the timings? So Japanese market, UAE time, it opens at 3 a.m., followed by Chinese, which starts at 4:30. So the market timing for commodities trading, commodities, they almost trade for 24 hours. Gold, silver, currencies, indices, they're tradable 24 hours, Monday to Friday. Okay. Now, Monday to Friday, you can trade 24 hours into it. There is a small gap of 1 hour, which you will see in, so in oil, the US oil, it opens around 2 o'clock or 3 o'clock. And the UK oil, which is Brent, it opens around 4 a.m. So there is a gap of 1 or 2 hours between both. But currencies and commodities, most of them, they are tradable 24 hours. There is something called a product overview, which you can always go in your platform and see the trading hours also. So if I see, for example, gold, I select here, go to the product overview. Now I can see on the product overview the trading hours. Trading hours show One second. See, now the trading hours they show Tuesday opens at 2 a.m. and it is there till 12 to 1. So there is a 1 hour gap when there's a mark to market difference where everything is shut, but again, the very next hour it resumes. So hardly 50 minutes to 1 hour break, and then again the trading goes on, it resumes almost 24 hours. So currencies and commodities, they're available to you for 24 hours, and you can always put trades into it throughout the day. As far as the stock market timings, stocks have specific timings. Yes, these are local timings. These are local times, so you can always take a trade and uh, you can use it. So, for example, if you are looking at 3 a.m. Japanese time, the Japanese stock market for 3 a.m. This is the UAE based time. Okay, somebody asked me a question. Can we take position in exchange of our choice? For example, can the settlement of Euro USD pair be on BFIX stock Q? See, it's a very good question, but the point over here is these all are derivatives like CFDs. So, uh, what you are saying, maybe it would be possible on exchange or with a bank, mostly with an exchange, but on electronic platforms like this where CFDs are used, you cannot do that. You buy euro and you sell it in the same market. So since the timings anyway is 24 hours for these CFDs, you can do a closing whenever you wish to. But in exchange, it will be much more exchange specific. You can check there. But on electronic platforms, it's not that complicated. You just buy and you sell it whenever you wish to. Now comes the most important part, looking ahead for the trade. It's 4:30. Let's try to do some trades and understand the concept of margin. And then as we progresses towards the US Open, we'll see some more details also. Now, I will pick gold right now. Gold, we have done few transactions yesterday, so we'll take gold first and I will explain you how margin trading works. Now, I told you, I gave you the example of the real estate, I gave you the example of the house. If you want to buy a house, it's $1 million, you have $1 million with you, but you're still not going to block it. Why? Because you used to employ debt, you want to have a mortgage so that your entire cash is not blocked and the productivity of your cash doesn't reduces, right? Similarly, now look at your trading accounts. I have $100,000 equity. Maybe you have a different equity in your demos, or maybe the amount which you will invest will be different, maybe higher, maybe lower. So what you need to understand here, you have 100,000 and I'm going to do a very basic trade. So keep a check. This is your order ticket. Okay. How do you get your order ticket? You can click on gold on these dots here, click on order ticket, it will come. Or most easier way, when you have made your watch list, you can just click here on buying or a selling price, anyone, click here and the order ticket will appear. So there are two ways to reach to the order ticket. One from the drop down menu, another just click on the buying or the selling prices and you'll be able to see the order ticket. Now, today, the lowest for gold, if you can see, is 1740. How do I see it? First on my watch list. Also, if you want, you can create a. So guys, watch list can also be viewed in a tabular form. It can also be viewed in a quote panel grid. Quote panel grid will give you the same thing. It is just in a much more square format where you can see L as in low, H as in high, all the different things. Only the opening and the closing will not be visible. Opening and closing, if you want to see, you have to see the classic table which is available, right? Click any of those, you will be able to buy and sell. Now I'm going to do a transaction. I have how much? I have a cash of $100,000 right now. I decide if I write 1 ounce of gold, I told you it ounces, right? So unit 1 ounce, press enter, and it shows me the gold which I'll be buying will be worth $1,755. If I write 10 ounces, so 10 ounce multiplied by my buying price, 17,556. If I write 100 ounces, 1755 multiplied by 100 ounces, gold is worth $175,000. So what we are able to understand is the buying price multiplied by the number of units and you can easily find the total value of the gold which you'll be purchasing. Somebody asked me what is the number in between both which is fluctuating. So good question. The difference between the buying price and the selling price. So there are two kinds of prices. We are looking at a buying price and then we are looking at a selling price. There's a difference between buying and the selling price which is constantly changing. This difference is around 70-80 cents. This difference is called spread. So spread is the income of the market maker, or spread is the income of the broker with which you do trading with, right? So spread is one income. Then there is a transaction cost, which is a brokerage that is charged, right? So the difference between the buying and the selling is this number which is fluctuating. So if you see 1755 55 cents and 1754 66 cents, this is the total difference. Okay. So this thing is called spread. Again, any concepts which you are not able to understand, write it, and we can always have a one-on-one sessions and we can explain it to you more. Now I'm going to execute the trade. Here, 100 ounces equal to $175,000, but I don't have 175,000. I just have $100,000. What I do, I write 100,000, press enter. What I can see, ounces are already calculated for me. 56.95 ounces, which will be equal to $100,000. So I understood that $100,000 will be equal to 56.95 ounces. What else I can see in my order ticket? Estimated margin 499, which is almost $500. If I go to my product overview, I will see this time that there is a margin percentage given to the gold, 0.5% till you are buying 1000 ounces of gold. I am just buying 56 ounces, which means if I have to buy gold worth $100,000, I just have to block 500 from my $100,000. How does this work? Let me show you what we were discussing in the presentation here. Now the value of gold which I'm buying is $100,000. This whole circle is $100,000, right? I have this much money in my trading account, but how much money I'm going to use? So the value of gold trade I have to take is 100,000. Margin in gold is 0.5%. So from my trading account, only 0.5% of this entire trading value will be blocked as a margin money. Okay, this is called position margin. So if you go back and try to do the transaction, you will see if you are buying $100,000 worth gold and you have $100,000 cash with you, you do not have to block your full money. You just have to block. I click the order. It's a 2-click process. One, and then you confirm. Just bought gold, 56 ounces. Buying price is 1755. Just 1 second, excuse me. Yeah, sorry. You are buying 56.96 ounces of gold, which is worth $100,000. Buying price is 1755. Now, very carefully look at this. If you want to see where are your positions, this was your watch list. Next is your trades. Where? So positions means the trades which you have taken. You click on positions. What you will see? You will see the trades which you have placed. Now in this window, you can see the gold. 1 second, let me stop this presentation and share the screen with you. Yes. Now, if you see this option is called positions. Okay. Positions here. Gold, B stands for buy, 56.96 ounces, $100,000, 1755 is your price. Your total loss is $43 right now in this transaction. And if you see this, let me just make it much more. Sorry, I just have to reduce the resolution. 1 second. Okay, I'll just maximize this for a moment and then again I will go back to my original resolution. If you see it, right now the margin which is blocked, your account value shows 100,010. Now 100,016. Why? Because you have a profit of 15, $16 right now. So what we understand now about account value, I hope everything is clear. Account value ahead, if there is a profit, account value is up. If there is a loss, account value is down, but it keeps fluctuating till the time you book a profit or loss for yourself. Okay. Let's also understand the profit loss scenario in this. You have 56 ounces of gold. Okay. 56 ounces of gold means gold, if it goes up by $10, what is the total profit? Type it on your chart window. If you have 56 ounces of gold at price X, and if gold price goes up by $10, what is the total profit? 56 ounces of gold and gold price goes up by $10. So what is your total profit here? Anyone? Okay, I got one answer. Anybody else? Okay, so 56 into 10, 10 times 560, right? Okay, somebody asked me, if I invest $10,000, can I take a position of 2 million? Yes, your understanding is completely correct, but I will come to that point where the risk part is, and I will explain it to you also. So $560 is your profit. Absolutely, all of you are right. $560 is your profit. Similarly, if it goes down by $10, you lose $560. Okay. Another important thing now, this is where we clarify how CFD works. I told you it is called contract for difference. Why it is called contract for difference is, now let me increase the resolution here so everybody can see this properly. Okay, focus on this part. This is your total margin. On the left of the account value, you see total margin and available. Now, total margin is $500, which means to take a trade worth $100,000 of gold, in spite of the fact that you had $100,000, you did not use your money, you just blocked $500. Now, see, you have a loss of $120, your account value is less by 120. So your account value is constantly fluctuating. So your margin held for this trade is 500, but your exposure value is $100,000. Okay, which means your profit and loss is based on the 100,000. Tomorrow, tell me if the portfolio value, the size of the gold trade which you have done is $100,000. Okay, you have, and tomorrow if the price of gold falls down by say 50%, what is your total loss? If your portfolio value was $100,000 and gold prices came down by 50%, what is your loss? Just write it on your chat window. How much will be your total loss? If the portfolio value of gold, if the value of the portfolio where you have purchased gold is $100,000, and tomorrow if the prices of gold falls down by 50%, how much is your loss? 50,000, right? 50,000, everybody's sending 50,000. So can I say that no, I only blocked $500 for this investment? How come my loss is 50,000? I cannot say that, right? Because $50,000 is my loss because that's the exposure I took. I did not block complete 50,000 for that transaction, right? So I did not transaction, right? So I did not, everybody's right who's sending 50,000, 50% of 100,000, absolutely everybody's right. So I cannot say that just because I blocked $500 as a margin money, my loss is also restricted to 500. If I do not do a proper risk management, my loss can be 50,000 also. It can be 60,000 also, depending upon how prices fall. So one thing which we understand is that no matter how much margin is blocked, I always have to focus on my exposure value. What is my exposure amount? My exposure amount is the one which you see here, 99,994 here, which is $100,000, right? Of which you have purchased the gold. It is just to buy that gold, I don't have to block complete 100,000. I just have to block 500. Now, that being said, let's take an example. What happens when I book my profit or loss? What do you mean by booking a profit or loss? That means closing your trade and accepting whether you have a profit or loss, you want to encash it. I have a loss of $92, $90, right? What I do, I click on close trade. I can see my loss here. I can see my quantity. Now see what happens to the total margin. See on the left side of account value, there is total margin, right? When I will book my loss, see what happens to the margin. When I click here, close my trade, I booked my loss. Margin came back to my available balance. I lost around $92 in this transaction, and it is taken from your account, taken from my account value. Now my cash also is 99,908. I do not have any other trades open. So whenever I do a trade, a margin is held against that trade. Somebody just asked me, but do you lose your trade margin if there is a loss? So the answer to that question, when you book your loss, you book your loss. Your loss amount is debited. But at this moment, your margin comes back to your account. Okay, so margin is the money which is held against. Otherwise, margin would be an expense. But over here, margin is not an expense. Margin is just a money which was held. Your loss was $92. That $92 is debited from your total account. Whatever margin was blocked, that comes back to your account. Similar will be in profit. If you're in a profit of $1,000, then your margin money is, let's say, 200 also. Whenever you book your profit, your 1000 will be added to your account value. Margin anyways comes back. So margin is something which is refundable. It is blocked, and then it is coming back to your account the moment you close your trade or the moment you settle your trade. Yes, somebody asked me, against the trade, there is a fees which will be charged. There will be a brokerage which will be charged, and there will be which is your transaction cost. So please talk to your relationship manager. He will send you a schedule of charges, okay, where all the charges are mentioned, commodity wise and indices wise. And before you do anything, the charges will be mentioned to you. Even in live account, when you are punching the order. So over here, when I was trading the order, let's say here in my watch list, gold, in a live account, like I put $100,000 here. So when I 100,000, it shows me margin. In a live account, it will show you the estimated cost also. So you can always see the cost and the margin way before when you're trading. Plus, where else do you can see your charges? When you go to history, whatever is being charged to you, you click here on history, you'll be able to see all the trades which you have done, deposits, withdrawals, everything. You can see it in the history. Okay, now somebody asked me what you did now. It is called intraday trading. How to do swing and long-term investments. So see, we will discuss that also. So swing trading is something. Once Vivian takes a session on technicals, also he will explain it to you how swing trading is done. But I will also give you a small demonstration. Now I have taken the trade of leverage. I hope the leverage and the margin is clear to everyone, because this is where the risk part comes in. Now be very careful and understand this. I bought $100,000 worth gold and I blocked $500. Somebody asked me in the chat that does that means I can purchase more? Technically, if I'm buying something worth $100,000 and I'm blocking 500, which means I have another 99,000 or 99,500 in my account, right? Which is not used. It's available equity. Let's take an example where in gold, I do not buy just 100,000. I try to buy gold worth $1,000,000. Now 0.5% of 1 million. So if 100,000, 0.5% is $500, what will be 0.5% of 1 million? It will be $5,000. I have how much money in my account? $99,000 in my account. Which means if I have to just block 5,000 to take exposure of 1 million, I can. So what I do, I punch in my order $1 million worth gold. Let's make it round of 600 ounces, which is 1.05 million. My margin block will be 5,200. I click here, 2-click process. I bought 600 ounces of gold. Now, if you go back to your positions, you will see $1 million transaction in a $100,000 account, 600 ounces of gold. Same math, guys, same math. Send me the answer. If in a 600 ounces, if gold goes up by $10, how much profit you make? The total profit. Send me an answer. You have 600 ounces and gold goes up by $10. How much is your profit? The total profit? $10 increase per ounce. It's not 60,000. You have 600 ounces, and if it goes by $10, then it is 6,000. Please be very careful with the zeros. Even when you are punching the order, be very careful with your zeros. It's like 1 0 can really make it and break it. So be very careful. $6,000 is the profit. Absolutely. If it goes down by $10, $6,000 you lose. See how different it becomes. Same $10 movement, same $10 movement in the same trading account with the same equity. Earlier, you were making $600, which was 0.6% of the total account value. Now, with the same $10 increase in a same trading account with the same equity, you are generating a 6% return, not 0.6%. Why? Because now you have leveraged your portfolio. You have leveraged your portfolio 10 times to your equity. So returns have magnified 10 times. But when returns magnify 10 times, what else magnifies? Your risk also magnifies 10 times, right? So now $6,000 profit you are making, but now if it goes down by $10, you lose also 6,000. This is where leverage becomes tricky. Somebody asked me down how long we can maintain the CFD position. So this is a very good question, because now what I'm going to show you, if you also can see, while we are talking, gold prices have just dropped from 1764 to 54 to 1749, and this is happening right away. Now, to understand the risk bit of it, first of all, the trade which I have done right now in $100,000 account, $1 million trade, this is aggressive trading. This is very aggressive trading. You do not have to be this aggressive. Why I'm showing you the aggressive picture is so that you can see how fast the losses happen, okay, and be away from it, because we need to be very calculative and we don't have to go very aggressive when we trade, okay. Somebody asked me how long we can hold this trade. So now please understand, I'm just taking a couple of more aggressive trades, but do not try this in your live accounts, okay. Just understand this, what I'm doing. Now I'm taking a very aggressive position. I'm trying to use maximum of my equity as margin, which means if I end up buying $8 million worth of gold, which will be equal to say 5,000 ounces, my margin blocked will be 96,000. But I have only 94,000 here, which means if I try to execute the order, I just cannot, because I don't have that kind of money. I have 94,000 and margin needed is 96. Let's say if I try to do another trade, say $7 million or $8 million, margin blocked 85,000. I have 94,000, 4,500 ounces. I click on buy. I just bought $8 million worth of gold. Again, guys, really risky. Now you have 5,000 ounces. What is happening here? 5,000 ounces in a $100,000 account. This is very aggressive, the most aggressive you can go, which means 5,000 ounces. If gold goes up by $10, you make $50,000 profit. But if it comes down by $30, you lose $150,000. Now you invested $100,000, right? Yes, we can give a limit price order also. Somebody just asked me, I will do the limit price order also. Let's just get familiar with this concept. Now see how quickly my account value is going down, because this is very aggressive trade. With $1 drop, I lose 5,000. Imagine if it goes down by $30, you lose how much money? You lose $150,000. But you never had 150,000, you just have $100,000, which means I take 100 from you and I send somebody at your place to take 50,000 more, right? This is something, that's why you don't have to go very aggressive on. So exactly, when somebody is giving here the example, if gold decreases by 50%, you would lose $4 million. But how can we recover 4 million from you when you have only $92,000? Exactly the point which we were discussing. uh, every broker has a liquidation point. Okay, because over here $8 million is not yours, so broker is giving you a leverage also. So how the broker will recover from everyone who's losing? There are a lot of people who are losing, right? And there are a lot of people who are taking a high leverage. That's why in this particular case, your there is a liquidation point, which means if price continues to go down, it keeps going down further and further and further and further. Your account value also drops. We have seen it. We are still seeing this. So when your account value drops with the prices falling down, what do you see? Your total margin. So there will be a point beyond which the broker will not allow your trade to go down further. It will close all your trades with the loss, which means when your account value. So how can you find out in this particular option? There is a circle here. Click on it, shows you, scroll down, standard closeout level 45,460. What does it stand for? This is 50% of the margin money which is blocked. If your margin is $90,000, if your account value drops and reaches to a $45,000, your trade, which is worth $9 million, will be closed. Your loss, which is $55,000 total, will be booked, and you will be left in your account with $45,500. Again, remember this, when your account value, which is fluctuating right now, becomes 50% of the margin which you have blocked, no matter how high the how low the prices fell, price is coming down further, 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 and further. But the moment your account value hits that point, when your account value reaches 50% of your margin, if your margin is 90,000 right now, account value reaches 45,000, trade is closed. So you booked a loss of 55,000, your $45,000 is still in your account. If your margin was $50,000, then your account value comes to 25,000, it will close automatically. Somebody just asked me, do I have an option of topping up the margin instead of closing the trade? You do have the option of topping up the margin. So see this, the available equity right now is getting reduced, right? If your available is reduced, you need to know that you need to add more funds to increase your available equity. So you can add your margin, but you have to do it before the liquidation happens, because liquidation is not in my hand, or it is not in your advisor's hand or anybody's. Liquidation is an automated process. If the moment your account value reaches 50% of your margin, automatically the trade is closed. So if you have put margin after that, you cannot have your trade reinstated unless you buy it again. That's a different thing. But before liquidation, if you put margin money, then you can still hold on to your trade. But please, that being said, never go this aggressive. Now coming back to the point, why do so many people they lose money in day trades? Do you know? Give me a percentage. According to you, how many percentage of people they lose money in day trades? Just give me a number, a percentage number. Write your numbers. How many of you think, how much percentage do you think uh, of day traders in the markets they lose their money from 0 to 100, whatever is your percentage number? Okay, somebody said 42%, somebody said 98%, again somebody said 98%, 40%, 70%, 73%. Guys, easily around 95 to 96% day traders, they lose money in the market. It's not 40%, it's not 60%, easily around 95 to 96%. What is the reason? Reason behind this is they become greedy. Reason behind this is everybody is now thinking, there are separate class of audience I have here. Out of you, most of you must be thinking, oh, I can lose whatever I have, and I can lose, I can have a heavy loss and really quick, and it's, very much gambling. I should not take aggressive trade. And then there is other half of you who's thinking, huh, I can take a $9 million worth position, in which if the trade goes right, I will be making a hell lot of money. And if it goes wrong, I just have to risk what, $60,000? This kind of thinking, see, I'm not going to be the person and say it's right and wrong, but from the past experience where I have seen, going extra aggressive on your portfolio, two or three times you might make a lot of money, but then eventually you lose a lot because you become greedy. Temptation, greed, emotions, it panic, it creates things in your mind which you don't want to be a part of. So never go this aggressive. Okay. You have taken a 5,000 ounces worth of trade. So if you're looking at a profit of $1 or $2,000, it is pretty obvious because the 50 cents movement will give you $2,500. But imagine you were just losing $8,000 3 4 minutes ago. So it's a very risky situation when you go very aggressive. Okay. Now what I'll do is I'll book this profit or loss, whatever I get, and I will show you what happens to the margin again. So I click here, red cross, close my position. Now, whatever money I have lost here, $900 I lose, my margin comes back, right? So the margin which was blocked, it comes back to my account, and my total loss is around 1,000, or sorry, $900, which I have lost here. So similarly, whenever you are taking a trade, you have to understand first how to diversify. Second, do not take too much leverage. Question is how much leverage you should take. If you're a conservative client means cautious investor. Cautious investors, either you trade within your limit, like what I did initially, I put $100,000, I bought gold worth 100,000. I still blocked the margin, but I still bought gold worth 100,000, not 200, not a million. Cautious investors, you can also leverage one or two times. So in a $100,000 account, you can take trades worth 200,000 also. It is cautious, conservative. It is not a very aggressive thing to do. You can do that. If you have put $50,000, can take trades worth 100,000 or 120,000. If you are a balanced investor, which is called moderate risk appetite, where you know that, okay, I will make some losses, I will make some profits, I'm ready to take that chance, you can take moderate risk of 4 to 5 times. Let's say if you are putting $100,000, you can take trades worth half a million also, 4 or 5 times. It is not conservative. It is slightly more riskier than the conservative bit. It's a moderate risk. If you go above that, 7 times, 8 times, 10 times, 20 times, 50 times, you're just aggressive investor. So you have to be very careful. You have to choose a profile for yourself. Somebody just asked me if the price is going up and down, can I hold for 2 to 3 days to book profit? You can. You can book your profit. You can hold it. See, as long as you have the margin money in your account, your available balance, your account value is not hitting 50% of the margin, you can hold your trade. Okay. Somebody asked me, I've understood that the trade will be forcefully closed when it falls below a certain level. But what about on the other hand, if the price is not dropping, how long can the trade be kept open? Just the question which was asked in the previous one. You can keep your trade open as long as you want to. As long as you have the money in your trading account, your available equity is there. You bought Apple shares, you want to hold Apple shares for 1 year, 2 years, hold it for 1 year, 2 years. Nobody's going to ask you to close it. You want to buy gold, spot commodity, buy, keep it. You can buy gold and keep it. Anything, right? So we understood the concept of margin leverage. We understood risk. We still need to understand diversify. And one thing before that, what we need to understand is there will be holding charges, but I think in shares. So guys, when you hold it, again, charges is something which you can discuss with the relationship manager. But right now, I think in shares, we are trying to remove the holding charges. I think to some extent we have removed it also. As far as commodities are concerned, there is a storage cost, which is one of the features of commodities. That's a storage cost, but that can either be debited or credited in your account depending whether you are on the long side or on the short selling side. Now, what is the short selling side? Short selling side is something which I have to explain it to you. And this is one of the most interesting things why CFDs are traded, because you can short sell CFDs also. First of all, why contract for difference? I told you in the beginning it's called contract for difference. But now I am sure you have understood that why it is called contract for difference. Because when you buy gold CFD, what you did right now, you did not get the physical ownership of the metal, right? You did not own that metal. What you did, you took a value of gold out of which you paid a fraction from your trading account and you traded in that value. You had 5,000 ounces, it went up by $10, $50,000 profit. So that 50,000 will be credited to your account. You don't have to do a whole up and down of 8 million, then 8.5 million, 9 million, 9.2 million. So you are just trading on the difference of it. What is the difference? Difference between the buying price and the selling price multiplied by the number of units which you have purchased. That's why they are calling them contract for differences, because you as a buyer, you are in a contract to trade on only the difference. You are not trading it to do a whole transaction. So if you're buying $100,000 worth gold, you're not giving 100,000 away, and when you are making a profit, you're not getting $110,000. You're just getting $10,000, which is your additional profit, gets added to your account value. So that's the money which you have made, right? You do not block your entire money, you block a fraction. Now, coming to one of the most important things, which is called short selling. Okay, I hope it is clear right now what we are understanding this together. I will also take some time to explain you short selling, and then once US opens, we'll do a couple of trades, try to understand at what price it has opened, and try to understand some stocks. Tomorrow there will be a technical session, which myself and Vivian will be there, and they'll be able to take you through. We'll be able to take you through the technicals. Somebody asked me, does CFDs have an expiry date like futures? See, if it's a future CFD, it will have an expiry date. But instruments like crude oil, gold, they are available in spot also, and they are available in future also. So if you're trading in future, they have an expiry date. But if you're trading in spot, they don't have expiry date. And shares, they don't have the expiry date. Shares you can buy and keep it. Index, also there is a spot, there is a future. So if you don't want to trade into futures and expiries, you have the option to do it in spot also. Now about short selling. Right now I made losses in gold and so many transactions. Why? I was buying it and it was falling down. Every time I buy and it falls down, right? Now if there was a way that I could make money from the falling prices, this is called short selling. I will give you one example. Let's take an example. Uh, a bag of sugar costs $10. Okay, I've used this example. It's easier to understand, so I'm just using it again. A bag of sugar costs $10. Now, this is just a hypothetical price. Let's say you, as an investor, you did some research, you did some analysis, and you predicted that the price of this bag of sugar from $10 it will drop to 5. Now you want to take advantage of this falling prices. How you take advantage of the falling prices? You come to me and you say that Yogesh, I want to borrow a bag of sugar from you. And I said, okay, uh, I can lend you a bag of sugar. You're a generous person. I will be a generous person. I lent you a bag of sugar. Now, when I lent you a bag of sugar, you borrowed it from me, okay, and then you went to a supermarket and you sold it. Now, when you sold it, what was the actual price of that bag of sugar? It was $10, right? Do this transaction in your head. If you have, if you borrowed a bag of sugar from me and you sold it in the market and the price was $10 a bag, when you sell it, you receive a $10 bill. Now, when you receive a $10 bill, what do you do? Bill, as in the $10 currency note, right? You receive $10. You take that $10, you keep it in your pocket, and now you wait. Day 2, day 3, day 4, day 5, day 6, you saw that the price of sugar from $10 it came down to $5. Your research was right. Now the moment it came down to $5, so the current market price is 5 now. When you sold that bag of sugar, you received $10, right? But that bag of sugar was not yours. It was mine. You borrowed it from me and you sold it. So now what you did? You went back to the supermarket, you bought it back. You bought the bag of sugar back from the $10 which you received when you sold it. But when you're buying it back, what price you are buying it back for? Type me the answer. If you listen to me what I said, type me the answer. How much for how much I am buying the bag of sugar back for, what price it has reached to. I have $10. I sold it for $10 and I received $10. I kept it with myself, right? And the price fell. Price fell to that point exactly. So good to see most of you listening. Now, when the price came down to $5, I buy it back. Now, when I buy it back, I buy it back for $5. Out of the 10 which I received, 5 I gave. You got the bag of sugar back. You came to me. You gave me the bag of sugar which you borrowed from me. I am happy. You made a profit of $5. You are happy. This is called, guys, short selling. Short selling is a transaction which you where you can short sell, which where you can sell first without owning the asset. You borrow it from your broker. How you borrowed the bag of sugar from me? You borrow it from your broker. You sell it live in the market, and when price comes down, you buy it back. But when you buy it back, it is just like closing your trade. The commodity comes back to the broker. The price difference comes to you in the form of profit, right? If you have sold it, price should go down for you to make a profit. If it goes up, then you are making a loss. So it's a reverse transaction. Okay, let's take an example now. So far, I've been buying gold, right? It did not work out for me. So I thought, okay, I'll try short selling it. So I go back to my watch list. Okay, here I sell 1746 right now. It might go up, but okay, let's just sell it. Nothing much, $100,000. Now we'll talk about conservative trades. $100,000. I sell it. Now see, instead of selecting blue, I'm selecting orange, which is sell. Keeping the same, margin is same. Place the order, 2-click process, sold. I did not own it before. I borrowed it from my broker when I typed the quantity. Now, gold, S stands for sell, 57 ounces, $100,000. Now, my loss is 72 right now because the buying price is still high. But if my selling price is 1745, which means if my buying price goes below 1745, I will start making a profit, right? If my buying price is 1745, if my selling price is 1745, and if it gold tomorrow goes down to 1740, I will make $5 on 50 ounces. I'll make $250 profit. This is how short selling works. Now let me show you one more example. Example, why you need to short sell. Now just see what has happened. If I were to see gold years ago, now guys, I'm just going to draw a few things and you see if it makes sense for you. Look at this. 2008 to 2011, gold prices rose exponentially from $600 to 1900. You select cross here so you can see the prices here, right? Right. If I see it correctly, in last 6 years from 2014 to 2000 or 2014 to 2019, just take 5 years. In those 5 years, we have noticed one thing. This point, this point, this point, here, here, here. And let's take this price also. Here. Now, if you see, and if I were to see it correctly in terms of just drawing lines, this peak here, if you see this, every time gold, the S stands for sell. So I'm just saying every time gold touched this peak, and since 2013 to 2019, touched here, it came down, touched here, came down. So if, let me just draw this in a much easier way. Let's take a full wave. So here, 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 this, again here, right? Again, see another wave coming in here, Again, this point it comes down. Again, this point it comes down. Small recovery. Again, when it reaches to this point, it comes down. Except in 2019, it breached this level of resistance, and if once it breached this resistance from 1350, it went to 1750, right? So what do we understand here is, if you all can see the same thing which I can see, that there were resistance points for gold where it, when it reached, it did not make any sense to buy, right? It did break the resistance and it went up, but that is where your stop losses gets hit. So why short selling? Short selling is done to take advantage of the falling prices by understanding the level of resistance. Now, one more important thing. This was for last 5 years. If you go back to 2011, you will see a similar pattern this time, but this time with much more. So if you see this resistance point here, see this 1, 2, 3, and then after 9 years, it has come back at this point. It went to 1764 today. It did not sustain. Again, it started coming down, right? Earlier, if I could show, and this stands for buying also, by the way. So if you look at the buying levels collectively, you would see something here it's a good buying, right? It comes here. If it breaks the support level, it goes down. But otherwise, mostly the support it continued, right? So when we are looking when it reaches, so this is a point of resistance, and this is where you can take a short selling position. Now, when you have seen the chart earlier, if I would have told you let's buy gold and understand that okay, you can buy gold right now, it's an uptrend, but now you understand that it is at a resistance, so you can short sell it. Somebody just pointed out, I think inverse head and shoulders pattern worked. So there are a lot of patterns and technicals which can be, and even what you're saying can also happen. So with technicals, again, it's a different discussion. Tomorrow Vivian will be there, so we will try to understand what kind of technical studies can be used. Firstly, not to complicate too much, the very important way is to find out the support and resistance. Okay, so I have short sell gold over here. Now again, this is a 12 years chart, so this is a long term trend. Those who were asking about how to spot, so if you're looking at a long term chart, you will short sell today and you will keep it for more than a month, because this is a long term chart for 12 years. For a short term trade, you look at a short term chart, you look at a chart for 3 hours, 4 hours, 30 minutes, 1 hour, see how the trend changes. Okay, so this is one way to do it. Everybody is clear with the short selling. In 5 minutes, US will open and then we'll try to do some more trades and understand other asset classes also. But for now, everybody understood how short selling works. Anyone who has not understood short selling, you sell first, it goes down, you buy and you close your trade. So the expectation is you have to close your trade when it goes down. That's where you will book your profit, right? Now coming to another point, I understood how short selling works for you. Okay, I will remove this chart and let me also set in the layout the positions. Okay, I will add account positions into it. Now one more important thing, let's say now how do you diversify? Now we will diversify in the next 4 minutes once US also opens, so you'll be able to see prices of all the trading instruments. We will diversify into stocks, commodities, currencies, indices, and I will tell you how to put a stop loss. Just, I think, 15-20 minutes more, and then we'll cover the session for today. And tomorrow we'll learn about fundamental analysis, which will be your news, your events, what factors affect what, and how the factors in the past have affected the prices before. So tomorrow is fundamental, and day after tomorrow will be charts and technicals, where we'll be understanding the technical bit of it, right? And then on Thursday, finally, we'll be able to do some trades. We'll be looking at watch list, we'll be doing some trades, and we'll try to be more familiar with the platform. So okay, I'll just quickly give one more example of short selling. Somebody just asked me, so I'll just give a very quick example, another way of short selling it. I did short selling in gold. Okay, now I'm going to take a stock. Let's take BMW. Okay, I'm short selling BMW shares. Why I'm short selling BMW shares? Now let's look at the fundamental way. Coronavirus pandemic, people are not getting out. Few people are getting out. Manufacturing has been affected. Automobile shares have come down a lot. So let's take an example. If I want to sell automobile shares, short sell automobile shares, I don't have BMW shares. I select sell. I'm borrowing it from my broker. Let's say 100 shares, which is equal to 5,300 because this price is in euros, guys. This price is in euros. So your account denomination is in dollars. So this is converted into dollars. 100 shares, you select sell. Margin block will be 160. Borrowing it from your broker, selling it live in the market, I have short sell 100 shares at 49. If my buying price goes below 49, I will start making a profit. If it goes above 49 euros, I will start making a loss, right? So if still you have a problem in short selling, we can always have a one-on-one session. And anyways, your advisor will also be able to explain it to you. I would suggest use it in a demo. It will be easy to understand it. Now, one more minute before the US market opens. Technically, if we were in the office, we'll be standing in front of the television and Bloomberg and clapping our hands with the bell ring. But since we're not doing this, we will be at our homes and will be waiting for the US to open. I have pointed out all these stocks. Okay. By the time now, I will book my losses in the short selling positions and will do fresh trades and try to understand about diversification and keeping a stop loss. So I'm booking my losses here. Why I'm making a loss? Because price is going up. I vouched for fall of prices, right? It has gone up, so I'm making a loss. Close here. I close here, right? Now, what we'll do is we'll go conservative. US is open right now, and if you maximize your watch list, you will see most of the US stocks are have opened on the higher side, but I see Netflix and Amazon, they have opened lower and still continues to go down. But if you see Facebook, Microsoft, HSBC, Comcast, Royal Dutch Shell, everything, the markets are up today. US 30 is going up further. Okay. BMW stocks today, it has gone up. Volkswagen has gone up today. Bayer, which is a pharma company, is up today. Adidas is up today by 5%. More stocks, if you want to add, which are related to US, McDonald's, Coca-Cola, let's say Ford, right? I will also add something called a share basket. If you remember, we talked about share baskets, which is a club together. They club the shares together and the basket moves up and down. So there's a streaming basket which has shares like Comcast, Fox Corp, Disney, Netflix, Amazon, etc. Right? Now, going further, we'll do some trades and we'll diversify. You have how much money left now? You have $100,000 left. I told you we'll do a conservative trade. So let's say if I have $100,000 and I want to diversify in a very conservative way, $200,000, which means two times, still conservative. $200,000, and I will divide this into different asset classes. Now, what I need from you, I need from you, I see if I can add a poll. Okay, just adding a poll right now. US 30, buy, sell. Okay, preview, publish. US 30 is a US stock market index. Those who think we should buy it right now, I will buy it. Those who think we should short sell, which means if you're expecting it to come down today, we will short sell. I have launched a poll. Just try to do a poll. We are going to take trades on the basis of this poll, right? No research, nothing, just on the basis of the poll. And I'll explain you what is the reason why I'm doing it. So those who think it's going to go up can go for a buy. Those who think it's going to go down, click on sell. So we will short sell. Okay. I've already launched the poll. Please try to do it so we can quickly do some more trades as well. By the time I will open US30, this is US30 right now, 24,397. Now I want to diversify worth $200,000 will be my portfolio, right? So 200,000 divided by five asset classes. So I'm looking at $40,000 divided equally into different classes. Now looking at the poll, okay, 84-15, 84% of you as of now think it should be a buy, 15% of you think it should be a short sell. Okay, let's take majority. I will end this poll now and I will buy $40,000 worth. So I'm just allocating equal amount to all the asset classes. $40,000 worth US30, I buy. Okay, bought it. I end the poll and I will reset it. Start with, sorry, edit. Now I start with gold. Buy or short sell? Do your votes. You have seen gold prices now, today, yesterday. I'm sure most of you have seen gold prices. The current price of gold right now is 1748. Those who think it can come down, select for short sell. Those who think it can go up, select for buy. And I will take a trade worth 40,000. Again, no research, nothing. Whatever your heart says, you do it. And then we'll see why we are doing it without any research first. Okay, 80-20. I will not tell you what is 80, what is 20. Do more, guys. Come on, there are 20 people here. I can see. Okay, 75-25, 77-22. Okay, 81 and 18. Okay, perfect. So what I have got here, short sell 81%, buying 18%. So I will go with the consensus. Gold here, short sell, same $40,000 because I want to divide this into 5 asset classes, 22 ounces, I sell it. Right, I short sell gold. I go back to my poll. Okay, final numbers were 21 and 78, still short selling on the higher side. I end this poll, I'm resetting it. Edit. Let's take example of, okay, let's take example gold. Okay, I will now add an agro commodity here. Or let's just take the agriculture index. Agriculture index or wheat, whichever is available, we'll do that. Buy or short sell. Random. Wheat is an agriculture commodity. Let me add this also here. Whatever you think, just say a buy or sell. We'll take trades on majority. Wheat, it is 495 right now. Lowest today is 494, highest is 502. Whatever you feel, just put it on the poll. All 20-21 people, just hit a buy or sell, whatever you feel. I just needed to place the trade, that's all. So far I have got 100% buy. Anybody else? I see a full attendance here. Just 10-15 more minutes and we'll be done. Okay, 11% says short sell. Now 20% say short sell, 80% say buy. So I see again 80-20 difference. 80% of you think, okay, 75-25. It's close. I just hope it doesn't become 50-50. So it's 75-25. Okay. Now looking at the polling, I will buy $40,000 worth wheat, lock my margin and keep it. This is my third asset class. Moving on, I will go now to Euro USD. Euro USD is here, 1.0858. Now Euro USD, are you expecting Euro to be stronger or to be weaker. Okay, I'm just again resetting the poll here. Euro will be stronger, or let's do it, Euro USD buy or sell. Okay, now Euro, if you're expecting Euro USD buy, that means you are expecting Euro to go up. If you're saying Euro USD short sell, then you're expecting Euro to get weaker and dollar to get stronger. Okay. Come on, guys. I see more people here. 22 people here. 80% and 80-20. Okay, 66 and 33. Now this is becoming really close. If all of you vote, okay, 62 and 37, 66 and 33. Exactly what happens in currencies market, the volatility, it is in the polling also. Okay, 38 and 61. Okay, 42%, 57%. It has become a completely divided opinion. So I still see 42% of you say buy and 57% of you say short sell. So what I'm going to do is I'm going to short sell it. 40,000 is the order and it's done. And now we'll just take one share basket, and among the share basket, let's take streaming basket right now, or let's take gaming basket, gaming, mobile payments. Okay, let's take streaming basket. Okay, streaming basket is about, this has stocks like Disney and Fox Corp and etc. Of the final polling for Euro USD, buy 50%, sell 50%. So I think we just short sell it, so that's okay. Now, last instrument I want to add money into, streaming basket. Buy or sell. I'm not doing into individual stock, I'm just doing into a basket. How many of you think so? Streaming basket has companies like Disney, Netflix, Amazon Prime. Okay, they also have stocks like Fox Corp, Viacom, AT&T. How many of you think streaming basket should be a good buy today? How many of you think should be a good sell? Good buy or good sell? I'm getting a 80-20 right now. This is the last instrument we are trading, guys. So anything you have, 87-12. A lot of you still on the buying side, 12% on the short selling side, 77-20, 81-18. Okay, this time instead of going with the poll, we are going to go against the poll. Minority of you think, so most of you, the majority has given to the buy, the minority has come to the sell. So what we can do is, this time we are going to short sell it. Okay, just going in a completely different direction. 40,000 worth streaming basket, sell. Place the order and it's done. I still did not add crude oil. I did not add any more instruments. I just added basic ones. Now, when I go back to my positions, what I see here, these are the trades which are suggested by you, right? I did it on completely, few of them I did by polling, few of them, the only last trade which I did not use the poll for it. In fact, I went against the poll. 20% of you said short sell. I said short sell it. Now, if you see why I told you we'll do this with the poll and do not do any research over it, because of the reason to tell you, even if you have not done your research, but if you're diversifying it, see the difference. US 30 is not related to Euro USD. Gold is not related to the streaming basket. Streaming basket is not related to wheat, and wheat is not related to Euro, right? Even if you do random trades, you see out of your 5 asset classes, 2 of them are in profit. And this is when you did not even do any research. You just went on with what you see on the product list, right? But when you actually do your research, you see entry exit points, the advisor assists you with it, you also take some time out. That's, now tell me, if you do it this way And now when people come and tell you, stock markets are very risky, we should not invest, I've lost a lot of money, I've lost my yearly savings and everything. If you do it this way, and on the top of it, while we're talking about risk management also, first your portfolio is worth 200,000. So that's like conservative, two times leverage. Another thing, you can always put a stop loss. All your day trades with commodities and currencies, you can select stop loss. And let's say you don't want to, your total account value is 100,000. If you keep a restriction of $1,000 on all the asset classes, which means 200 maximum your loss, whereas $400 your profit. Your risk reward ratio 2 is to 1. You're risking $200 to make a profit of 400. Modify this, close. Again, stop loss 200, take profit 400. Modify, close. Even if you're not looking at the screen and you are busy with your work, whenever your stop loss hits your target, you will be out of this trade, and it will prevent you from losing more than your risk profile, right? I have kept a risk profile of not losing more than $1,000 every day, so that it will take 100 trades continuous for me to lose my entire $100,000, right? Now if I'm that unfortunate, then it is sad, it can happen, but I want to be very conservative. So what I have done is, now I have put my stop loss $200, $400. My maximum loss today will not be more than 1,000. Whereas if all my trades hit a profit, then I will end up making a profit of $2,000. If all my trades hit a stop loss, I will end up losing around $1,000, right? So the idea is, I have five trades into $400 take profit, $2,000. Five trades into $200 loss, it hits a stop loss, I lose 1,000. So if my all trades, even if my 50% trades go wrong or 60% of my trades go wrong, I still end up with a net profit. Now I have some questions coming up. Can we trade in a volatility index on this platform? Like you can do trade in volatility index, but the ones which is there, which is listed in CME market, which tracks S&P 500 as a fear gauge. So you can trade into a volatility index. Uh, you just have to go to your platform, and you can go to the watch list or add it, or just search over here. Here, volatility index, right? It's down today 11%. Okay. Now see, one of my trades, it hit stop loss. How do I know? I go on history. See, my stop loss got hit, $200 streaming basket, which I short sell it in spite of the pull set buy. I short sell it, it went down, it hit my stop loss. I go back to my positions, I have another position which I've kept stop loss. Even if I'm not looking at it, it is doing. So guys, diversification is needed. Why? First, you need to spread your risk, uh, and spread your risk into asset classes which are not correlated to each other. Only then you achieve the best diversification. Plus, always keep a stop loss and do not take over leverage. Right now, the portfolio value is not more than $200,000, and I invested 100K. So I'm still on a conservative side, plus my risk is covered. So how can I lose everything? How can I lose my yearly savings? Right? It's difficult. So that is one threshold which you should have. Somebody asked me, should we fix stop loss and take profit at the same time? You can. It's up to you if you want to fix it at the same time. I feel that if just make sure that the amount which you fix, if you're putting a stop loss of $200, then your profit should be at least 200. Do not risk $200 to make a $50 profit. This is a very normal investor mindset, that the moment they see $50 profit, they book it. But when they see it going towards a loss, they don't. Now look at my portfolio right here. Again, these are the trades which you guys have suggested. I have not taken any of those with in my way, except for the streaming basket, which went wrong. See, gold has come down to 1736 short selling, so I'm making a profit, which you suggested. US 30, it has gone up. again, which you suggested. I'm making a loss also, but see, because of the diversification, I'm having still a net profit, right? Because I diversified into different asset classes. So these are trades suggested by you. Somebody asked me that can they withdraw these profits? This demo account you cannot, but in your live account you can. Right, guys? So this is how you put a stop loss. So we understood today leverage, margin trading, concept of CFDs, understanding how to execute a trade, how to put a stop loss, take profit, how to diversify, how to understand these asset classes, how to create a watch list and keep a check. One important thing somebody asked me about putting a pending order, which means how a pending order works. That let's say you select Microsoft, for example, okay, and you think that Microsoft is daily high right now, 184. Maybe it's not the right price to buy. So you don't want to trade right now. You want to select a limit order, buy an 100 shares, and you will not buy right now. You have in your mind, okay, when it comes to 162, that could be a better price. I will buy then. Select limit, place a limit order, and this will be placed in your orders. You can always go to orders and see this. So this is a pending order. What is a pending order? Sometimes you don't want to trade at the market price. You want to wait for it to come down, and you will not be there to always keep a check. So you put an automatic order. Whenever Microsoft comes 162, automatically 100 shares will be bought for you, and the trade will be executed, and you will be able to see it in your positions, right? So this is how you can keep a pending order both for the buying positions and for the selling positions. Anybody who needs the guidance in navigating the screen or demo mode, video tutorials. So we are working on it. We already have a couple of videos on YouTube, but I would suggest you call your relationship managers, tell them to come on a Zoom meeting with you. They will be more than happy to give you a run through of the platform. So there are people available. There are videos on YouTube also. So what I'll do is after I finish this session, I will send a message to all the relationship managers to come give you the demo accounts. If you have not received it, please call them and take the demo accounts. Today's assignment, what you do today. Now you have understood a few things. First of all, today you definitely get a demo account. Okay. You need to practice on the demo bit. Somebody asked me if we put a stop loss and stop profit, which one will be action first? Whichever comes first. So if you have bought something, again, it's an important question, guys. If you have bought something here, US 30, your take profit is 24,619, your loss is 24,253. If it hits 619 first, your profit will be booked. If it hits your loss price first, your loss will be booked. Either way, you will be out of the trade. So it depends which direction the market goes. Now, for assignment, let me first switch off the screen, go back to the slide. Today's assignment will be you first get your demo accounts. Once you get your demo account, create a watch list, the one which I created. Okay. Another thing, I also asked you guys to get newsletters. I've told the relationship managers to send you newsletters. Newsletters are something which is provided, which gives you information. That reading is needed. You should be aware about what is happening around the globe. So those newsletters you read, very, very basic, nothing very hi-fi, and do some trades for yourself. Whatever equity value, whatever account value you get, if you have account value $50,000, take trades worth 100,000, but divide that 100,000 into 5 or 6 different asset classes. So if you're divided into 5 asset classes, 20,000, 20,000, 20,000, 20,000. Buy short sells, stop losses, take profit. It's what you do today. Okay. When you do this today, and pick instruments of your choices, companies of your choices, and just buy and short sell them, see the margin getting blocked. Put a stop loss, put a take profit. Tomorrow morning, you will see this again. Okay. And tomorrow morning, we'll meet for fundamental analysis. Tomorrow evening, we'll meet for fundamental analysis. Tomorrow, we will cover how to look at the market calendar, the economic data, the news. My sessions are recorded. Sir, somebody's asking about the recorded. They are recorded. We are still trying to put it on YouTube. There is some sort of clearance. It's still needed. They're still editing it. So That is that. But you can catch up through the sessions. I think this is one of the most important things, the platform part. And tomorrow, if you can come, then we will understand the fundamental analysis. We'll try to understand how the market calendar works, which are the news which impacts the most to commodities and currencies, non-farm payroll, unemployment rate, industrial production, oil inventories. And then we'll talk about, when we are buying the stock, what we should look into the stock, what kind of news we should look into, what happens to the earning season, about price action analysis. We look into some more strategies apart from just speculation, right? And the day after that, we'll have a technical analysis session, which will be your charts and historical price data. Every day you have to keep trading. Tomorrow's assignment: do trades today. One thing which I need from you, if you can, and if it is not too much to ask, whatever trades you take in your Excel sheet, or not an Excel sheet, on a Word document, anything, record it for yourself, why you have taken this trade. If you have bought it, why you have bought it, and if you have short sell it, why you have short sell it. Give yourself a reasoning, and then we'll talk tomorrow, right? Again, guys, I know I always extend my time period 1.5 hours to 2 hours, and I've seen you being very patient with me. Thank you for all your questions. I hope I've answered most of it. If you have any problems, any issues, your relationship managers will be available, and we'll meet for another session tomorrow, day 3. And again, I request to all of you who came today, who came yesterday, please join tomorrow also. We are on a progress, and you will learn something new today. You will learn something new tomorrow, and we'll meet once again. Till then, stay home, stay safe. Also, please review us on Google if you liked the session, if you did not like the session, anything, any reviews you have, please review us on Google. And please talk to your relationship managers also. If you want a personalized session with them, they can guide you with the platform, they can send you demos, everything. You have assistants over there, please use it. Right? Once again, thank you so much. Please stay home, stay safe. I wish a great health to all of you. Thank you, and have a good night.